Let me now bring on board Jal Irani, Director with Macquarie Capital. Jal, good morning. Always a pleasure to have you back on ET. Now, Jal, let's start with something which you track with the magnifying glass, the entire energy space. Do you see some price actions, price hikes in the deregulated space coming immediately after the presidential elections?
Well, a price hike is significantly overdue. Essentially, a price hike had taken place more than a year back, so towards the end of June in 2011. The country needs a price hike desperately because budget deficits are running significantly high. We estimate that at the current run rate we could end up with a $35 billion subsidy burden. And the trade deficit clearly is not sustainable. So from an economic standpoint, it's extremely essential that we get prices are hiked. This is unfortunately purely a political decision, which makes it that much more difficult to guess what is going to happen. Logic suggests that indeed, once the presidential election's over, the political scenario may give the government a bit more leeway to actually increase prices. So one is hopeful that prices would indeed increase.
Jal, there are talks of partially deregulating diesel. The government is working on proposals, such as fixing subsidy on per litre basis and rationalizing state taxes. Do you see this as a feasible move? Well,
recent development seems to suggest that Kaushik Basu, who is the economic advisor to the finance minister and hence the prime minister, seems to enjoy greater support, a significant support from the prime minister. And these are suggestions which have been made by Mr. Kaushik Basu. So we would think that while typically the probability is rather low of significant reforms in an environment where the deficits are running very high and petrol per litre subsidy is more than 10 rupees. So I would normally think that the probability of this move is rather low. But I would give it a bit higher probability given that there is some positive developments and that Mr. Kaushik Basu seems to be enjoying the Prime Minister's ear essentially. So not a high probability, but a small probability you could see a bit of reforms indeed.
Chal, what explains the recent outperformance in ONGC? Cheap valuations, under ownership?
You see, ONGC actually at high oil prices is a counter-cyclical to oil. So interestingly what happens is, as oil prices fall, its subsidy burden falls at a faster pace. So it strangely enough benefits from lower oil prices. That is one, I'd say, reason, more market force driven reason that it has performed well. But ONGC is a stock that we like. It's one of our top sector picks, not the top sector pick. The reason also is that we believe that ONGC is poised to have a mild turnaround in its prior volume decline. Essentially, ONGC has got many large blocks where its recovery rate is extremely low. So if you look at Mumbai High, which is roughly half of India's oil and gas production, the recovery rate there is barely 28%. And they have been taking steps now for years to enhance production there. A lot of the steps that they have been taking are now going to result in higher production. And similarly speaking, now for the last 4 or 5 years, ONGC's reserve replacement ratio has exceeded 100%. What this means is that they have been replacing reserves faster than they have been actually consuming. This, after a lag, does indeed result in actually increase in production, and that's exactly what is happening. So we think there is some strong fundamental investments coming into ONGC, and we are of the opinion that should sustain.
Charles, discount between BPCL and HPCL seems to be narrowing down. What is your observation?
I think one has to define the time frame for the discount between HPCL and BPCL. Indeed, in the near term, HPCL has been performing a bit better than BPCL, and the reason for that is that it is a greater counter-cyclical to oil than BPCL. So as oil prices fall, it benefits more than BPCL does, and hence a 20% drop in oil prices benefits it more. But having said that, if you look at a longer time frame, actually BPCL has been a stunning performer, and it has significantly outperformed. Now, BPCL has essentially added $2.2 billion of value in upstream, especially in Mozambique Area 1, which is unparalleled, and certainly HPCL hasn't had those sort of upstream investments fructifying. So indeed, near-term HPCL has done better than BPCL, but in fact over the last few years, BPCL has been a significant outperformer, not only to HPCL, but even the market.
Jala, what is your assessment? Do you think that we could soon get a gas price hike? Because if that happens, that will be a jackpot for upstream companies like Reliance, ONGC, and then Oil India.
Absolutely. In the case of ONGC and Oil India, last price hike was 2 years back. Domestic gas, the last gas price hike was 2 years back. Gas prices in India are barely 1/3 of international levels. So I indeed see that there is a likelihood of a gas price hike. Notably, at the moment, it's not being talked about, so there's no hint of it as yet. So unlikely that it's going to happen in a hurry. But in my opinion, it should happen. I mean, if I were to guess, I would say in the next 6 months to 1 year. Now, in the case of Reliance Industries, while similarly it does also deserve a gas price hike, what complicates things in the case of Reliance Industries is that it's actually got a 5-year contract which expires only in 2014. So Reliance also should get a price hike, but I mean, I wonder if it's going to happen before 2014.
Jal, so what is your preferred pick in the oil sector?
By far, BPCL is my top sector pick. Essentially, BPCL for the last 10 to 12 years has been one of the best performing stocks in the index, and in fact has got significantly undernoticed. There is scope for a sharp increase in earnings, and in fact a continuing strong valuation re-rating. The reason for that is because the management very sensibly and strategically has been spending in non-subsidy related areas. As a result, its subsidy-ridden petroleum product retailing business is actually becoming smaller relatively smaller as a component. Now, the value accretive spend has been one in upstream areas, essentially such as Mozambique. Mozambique is within a very short period of time now among the top 20 gas reserves in the world.
Chal, what about Cain India? That stock also has been a massive underperformer of late.
I think operationally, Cain India is one of the best upstream companies in the country. It is growing production, and in KG onshore, it's also recently found potentially large new reserves. It does face headwinds in the near term, nevertheless. It is by far the most sensitive to oil prices, perhaps across Asia. So a $10 decrease in oil prices impacts its earnings by 13%, which is rather significant. So that's one key thing which is presented headwinds to the stock price. The other key thing is that the free float in Cain India is insignificant. It's barely 18%. So if you account for Vedanta's stake of 59%, Kane PLC after the 3.5% sell down is I think about 18%, and LIC has got a 5% stake there. Now with Kane PLC clearly selling down, that is going to put pressure on the stock price. So therefore near-term headwinds are essentially Kane PLC sell down and oil prices, despite being actually Kane India being a brilliant company.
Right. So Jal, what are your expectations from the first quarter results from the oil and gas sector?
You see, more than half of the oil sector is oil PSUs, where the earnings are essentially driven by very ad hoc subsidy allocation in the first 3 quarters. So for them the first quarter is really meaningless. The only thing for those companies I'd say is that for the oil marketing companies, they had been given very little reimbursements by the government in the first quarter of the last financial year. So to that extent their earnings this quarter may look better. The only 2 companies which actually should have a meaningful, one can meaningfully talk about in terms of earnings is Reliance Industries and Kane. Reliance Industries I think would face even more pressure on its earnings than it has faced in the previous quarters. Unfortunately for them, not only have Asian GRMs been weaker this quarter, but also naphtha is a very large product for them uniquely, and the crack spreads on naphtha have collapsed by $4 a barrel. The INR depreciation should help, but not that much, especially as gas volumes continue declining at understand that Reliance should report a reasonably strong increase in profits. The INR depreciation has helped significantly, and its production has been ramped up to 175,000 barrels a day. So although from middle of March it did have an increase in cess burden of about $4.5–5 barrel, these 2 factors more than overcomes that.
Jal Irani, appreciate your time and thank you for joining us.